Hello, passive investors. Welcome to Passive Pockets, presented by Equity Trust. I'm your host, Jim Pfeiffer. As you know, a critical part of investing is knowing who you're investing with. So today, we're going to meet Dax Mitchell from MAG Capital Partners. Let's get into it. So Dax, welcome and thank you so much for supporting the Passive Pockets community.
Thank you, Jim. It's an honor.
So to start, just tell us about MAG Capital. What kind of real estate do you guys focus on? What do you guys do?
We are a Texas-based investment firm founded in 2015. We focus on industrial, and within industrial, we specialize in the sale-leaseback structured transactions. We're approaching about $1.5 billion in AUM, and our competitive set is all institutional. Most of the leases are 15 to 25 years. We're getting a lot of 20 and 25-year leases now, built in annual escalations, usually manufacturing or distribution, American manufacturing, American companies. Most of the companies that occupy our buildings have been there for 30, 40, 50 years, have been through cycles. Most of them are private equity owned. The goal is cash flow, long-term appreciation, stability, and we like to think of these investments as diesel engines. They go through mud, they go through rain, they weather cycles. They do exactly what they're supposed to do. We've never lost capital, and we've never missed a distribution, that I can even think of. So very stable, very reliable. And if you like what's in the investment deck, then that should be what you get.
Yeah, and as an investor, I completely agree with that. I've been super happy with my MAG Capital investments for sure. Can you talk about just real briefly where you see industrial going, because it's been such a hot asset class for so long, and now with all the changes in the economy and tariffs on, tariffs off, and back on, how is that going to affect industrial?
We've done some really deep diving in here, including interviewing all of our tenants and all of our new acquisitions. And I'm not going to say it's much ado about nothing, but when you really put pen to paper, as an example, we do development as well, generally within, like on an expansion within an existing lease. And if you look at steel prices on a new development, a new industrial development of being, say, 20% of the cost, when you round that out in terms of the development and the ultimate cost on value, it came out to maybe a 50 to 100 basis point difference in value, which is within the alpha cone that we're looking at. I mean, things fluctuate a little, so I'm not saying it's a nothing burger, but I think it's overblown, and we're very cautious, and I think that what people don't realize is that companies are nimble. Americans are smart. Businessmen are smart. You're looking at they don't take into consideration on CNBC and MSNBC the entrepreneurial spirit, and businessmen in America find a way. They fight. So we keep our eye on it, but at the end of the day, we do one deal at a time. We do good deals, and you got to buy through all markets, and that's what we do. And if you take wisdom from Buffett and Munger, when people are fearful, be greedy. It doesn't mean buy bad deals, but it means stay the discipline, stay the course. And when you're buying good deals, they're bulletproof, and they should be. And that's what we're here to do.
Yeah, and I think buying through all markets or staying the course through all markets makes sense, right? That's basically what dollar cost averaging is, and you can do it with real estate too. So speaking of real estate, right, that's what this is. So how did you first get into real estate? What made you think, yeah, I'm going to go and then buy industrial real estate? So can you talk us through that journey a little bit?
I started my real estate journey in college, University of Texas, and I just didn't have the amount of money in my pocket that I felt like I should have as a 18-year-old college student. And so I got my real estate license, and I started then at a very young age, and I've stuck with it all these years. I'm 51 now, so I've been at it 30 plus years. Um, and so I've weathered, my father, my family was in real estate. I watched my father go through the 80s. I've heard all those stories and seen the impacts and had endless conversations about those times. And then in 2008 to 12, I guess people call it the GFC, the Great Financial Crisis. I I became a real sponsor at that point. I was doing more brokerage, commercial brokerage in Los Angeles, where I lived at the time for many years, and I was doing very well as a broker. I was already running the deals for all my clients. Buy this, you're going to do this, flip that. And so when '08 hit and brokerage shut down, I mean, it went to zero. Then I stared into the abyss, and ultimately I made the decision to raise money and start buying deals. And so I started bidding on government RFPs for office space. So any government entity from federal on down to your local city and county, they've got to put out an RFP for office space. And so I would find these 10-year leases. I'd find a cheap building on LoopNet or CoStar, and then I would develop it. And at the time, I could finance it because the capital markets were all but shut down. And I ended up winning a $33 million development with the state of California. And it took about 4 years to do. And when I came out of that in 2012, I was just like Valerian steel. I was ready to go. The capital markets were back. There was optimism. And then I met Andrew G a short time after that, and we formed our partnership and continued to develop, and then began to study the long-term absolute net sale leasebacks. Where we kind of fell in love with the whole theory and strategy and structure of it, and the rest is history.
Yeah, that's great. So then you've been in real estate for all these years, right? There has to be some, I know there's success now, but there had to have been some struggles at some point. And I always think, you learn a lot from your mistakes. So is there something that a mistake you've made or you've seen someone else make that has helped you kind of learn something going forward?
Oh, that's an endless well. That's constantly. I'm constantly refining, but I read a tremendous amount. I was a history major in college. I didn't exactly understand why I was a history major at the time, but in retrospect, it's because I like stories. I like to know where things were, where they are today, where they're going. And so I'm a curious creature. I like to understand, and I'm a huge believer in reading. It doesn't even have to be market related. It can even be fiction, because that you're going to draw wisdom from any of that. But I study the people that have come before me. There's a great podcast called Founders, that I like anybody that loves learning about the greats. I'm obsessed with. I listen to it. I study it. I take notes. But asking questions of mentors, reading, studying, and most importantly is knowing yourself. I've been in hard situations, and I know at this point who I am. I know how to get in and out of tight corners. And it's a bit of a sad reflection of humanity in a way, but growing up in a small town in Texas, you shake hands, and if you don't do what you're going to say, what you say you're going to do, then nobody will do business with you anymore. And I think, at a basic level in the business that I play in, where I'm trading paint with institutions all day long, every day, the difference maker in a lot of cases that gets us the deal is that people trust us. We do what we say we're going to do, and if it doesn't work in our favor, and we've committed to do it, then we kiss the toad and we do it anyway because we committed to it. And I think sadly that is an edge.
Yeah, I think that's a great way to look at things, right? Is if you're committing to something, you got to do it, and that's the kind of company or person that people like to do business with, not only on the buying properties and partnering with the companies, but also for the LPs, right? We want to invest in the company that's going to have our back and do what they say they're going to do. So that's great
And
to
for a
hear.
sponsor, that means writing a check. That means not suspending distributions. That means if a sponsor suspended distributions on something and then you see them out fundraising for other stuff, Like I've invested in that stuff too, and it doesn't feel good. And it means, bringing the good news and the bad news. But I think that you got to be willing as a sponsor to write the check and take care of people. And if you take care of people, then they'll be there for you on the next one. And if a deal goes down, I mean, we're big enough now. I've never had a deal go down or lost capital, but if one did, and we had to eat crow on it, I own plenty of other deals. I'm going to say, all right, we lost on this one. We did our best, but I'm going to give you guys a piece of that deal to make up for it. We're going to get through it together. And I think with that approach, with that kind of attitude, which almost feels cavalier, you're never going to get it from an institution. But with that approach, I feel good about asking people to invest in our deals because I know that I'm not going to see all of the problems in advance, but when they come up, there's only one move, and it's the next right thing. And if you do the next right thing every time, then we can be successful and move on together.
Yeah, well said. I love that. So you mentioned you invest in real estate maybe outside of MAG. I'm sure you put a lot of capital into the MAG deals, but can you talk about, not specifics, but generally your other investments in real estate, maybe some asset classes, some markets you've invested in the past?
You mean personally?
Yeah, personally or through the company, however you do it. Just, I think our listeners are interested in not only MAG and what you do with industrial, but what other kind of real estate are you looking at? What other kind of real estate do you invest in and are you interested in?
I mean, I do some residential. I invest in. I bought a house in Aspen of all places during COVID, and that market is the greatest market. And I sold that off 2 years later and doubled and bought another one, and it's going to be probably a 10x. I mean, that market is mind blowing. So I'm doing a couple of deals there, and I do syndicate some of that. So if you follow Mag, you'll see those, or you can ask our team about them. Those are juggernaut. I love doing that, and site visits are kind of nice on those too.
I'm sure.
But and then we also have a private equity company in terms of the doing the industrial all these years. And generally, when we buy an industrial deal on a 20 or 25-year lease, there's 9 out of 10 times it's private equity on the other side. And so we've had a lot of exposure to private equity, how they do their deals, all their capital stacks, and invariably, I knew at some point I was going to be buying operating companies. And so in 2001, we set up a private equity company, and we've now closed on, I think, our 11th or 12th company, and have maybe 500 or 600 employees over there. And so I love the private equity business where you're buying the small to medium cap operating companies, American businesses, Sparks, Steel, that hard blue collar. That stuff really, when I go visit those companies and sit with the teams and I walk the factories, it just, the fear that may creep in on all the armchair quarterbacking and the news and the negativity and all of that. Like when you go and you sit and you watch stuff being made, and it cuts through it all. So I love the private equity side of our business. I put a lot of capital into that, and but there's some great other businesses out there. I mean, I'm not invested in mobile homes, but I see the cash flow on those. It's really enticing. I don't really understand the self-storage stuff, but a lot of people do. And of course, I think multifamily is always going to be a bread and butter, of America. So there's some great, I would say, maybe more so than, I mean, go with asset classes that you like. I mean, I love industrial. I understand it. I sleep it, eat it, breathe it. But I would say, a lot of it's going to be sponsor driven. Go with sponsors that you like, that you can get a hold of, that communicate, and that you think will do the right thing when and if things get a little tricky out there, because they do. And I think that's almost more important than the asset class.
Yeah, that's great advice. I love that. So switching over a little bit, I want to talk about kind of financial freedom, because our community is built on people that are looking to, maximize their wealth and become financially free. And it can mean different things to different people. So can you kind of talk about what financial freedom means to you and what it looks like to you?
it just feels like as American as you can get. It's about sovereignty. It's about being able to do what I want to do when I want to do it, and you know, financial freedom is just not I think not for me it's getting rid of the worry. I think maybe being broke in college and looking into the abyss in 2008, and I just wanted to get to a place where I didn't have to worry anymore. And I didn't want to be afraid of not having cash. I think that's probably maybe everyone's. It's like Munger and Buffett and the greats say good businesses can go bankrupt because they run out of cash, not because necessarily they're bad businesses or maybe they're poorly managed for a moment in time, but they go down because they run out of capital. And I never wanted to. I think that was probably a fear-driven thing for me to never want to run out of cash. And so it's funny that I ended up in a business that these 20-year absolute net zero landlord management deals with rent escalations and quarterly financials that get turned into us every quarter on every tenant so we can monitor. I feel like I can take this. I feel sovereign. I don't look at a Moody's report to see if the stock that I bought, if that company is doing well. I've got a full credit team and we do it ourselves every 90 days. So I feel like I took ownership over my own finances, my own cash flow, my own life. And I don't know what's more American than that. I mean, that's what financial freedom is to me, the freedom to do what I want to do when I want to do it. But I'm also tethered in discipline and morality and ethics. And I think it's all of that. That's an awesome question. So,
Well, that was an awesome answer. So thank you for that. And the last question I'm going to ask, you've already kind of answered, but I want to see if you maybe have a different answer that you want to add into it, because when you were talking about choosing the operator, man, you nailed it. But what is the most important thing passive investors and syndications, the type of investing we do, what's the most important thing they should learn or do to maximize their success in this type of special investing that we do?
well, I mean, if you're early investing, I would spread it around a little bit. But I mean, take the time to get to know the sponsors. And I mean, just I think you just using your instincts. Is the guy a little salesy? Are they full of it? Are they dancing around the answers? Track record's obviously important. You think the sponsor's going to write a check if things get dodgy? Also, if things do get tricky, I mean, I've been in LP rooms, and like in the past couple of years, multifamily's gotten hit hard, and I'm invested in some multifamily sponsor friends, and suspended distributions, and with high rates, you can have a great sponsor with a great asset. It's just a tough time, and you got to hang on. But I would say you got to back your sponsors. Once you write the check, give them love, give them support, call them and say, is there anything I can do? And I think that's different. And I think it's easy to criticize and get cynical if you're in some of the chat rooms and in some of the LP pools. But I would say once you write the check, give them 1,000%, back them up, and spread your money around a little bit, and read the docs. A lot of times now we've been at it so long. A lot of times people will commit and I'll be like, wow, we just sent the deal out. You committed in 30 minutes. Did you even read the deck? Will you please at least tell me what state it's in, but it is a relationship game and it's a trust game. And if a sponsor violates your trust or isn't communicating well, communicate that to them. And if they're, we've made tons of mistakes as sponsors, just part of the growth. But a lot of it was around communicating. What are we communicating? And we're really a shop that's open to learning. So you want a sponsor that is willing to learn, put their ego aside, listen to the feedback, and make an immediate change in how they do business, because the investors are the client, and if you're not happy, I'm in the service business, and I want to serve my investors well. I want them to be pleased and happy, and I want us all to make money together. And it's possible. So I think hug. Don't forget to hug your sponsor. I think is the takeaway there. They're people too, and the good ones will listen and grow with you, and we can make a lot of money all together, in the long term. So
That's fantastic, and we have a meetup coming up this week actually, and you guys, some representatives from MAG are going to be there, so I'm definitely going to be giving Drew a big old hug after that.
Drew's a hugger.
He is.
He's a hugger.
He is. I can't wait. So that wraps up this interview with the principal and founder of MAG Capital, Dax Mitchell. Thank you, Dax, for being with us. And to everyone out there, be sure to check out our YouTube channel and subscribe to our podcast for more great insights into the world of syndications. Thanks for tuning in. And as always, happy investing.